The New York session yesterday was driven by the same sentiment as the pre-market. The Dow Jones was not able to shrug off pressure of downbeat corporate reports and closed in the red. The S&P 500 and the Nasdaq managed to grow, and the S&P 500 climbed to a new record closing level. The information background today is more varied than on Tuesday. Apart from corporate reports, investors have to digest PMIs for the United States. The S&P 500 traded flat for the most New York session yesterday. Still, it managed to surpass the two previous record closing levels. The index rose by 0.29% to close at 4,864 points. The major stock indexes traded mainly in the green in the New York pre-market, and the Dow Jones also gained ground. The Nasdaq came to the fore thanks to shares of the chip makers and China stocks. Futures on the stock indexes grew by 0.4 and 0.9%. The S&P 500 is expected to trade in the intraday corridor between $4,854 and $4,900. The S&P set the third historic record yesterday in terms of the closing price. Investors view the upcoming quarterly reports from the Magnificent Seven group as a clue to whether Wall Street's rally will pick up or lose steam. On Tuesday, traders were focused on the corporate reports. The Dow suffered from weak earnings forecast for 3M, whose shares tumbled by about 11%. Johnson & Johnson fell by 1.6% after quarterly results came in slightly better than expected. Meanwhile, Netflix shares rose by 3.2% after the video streaming service beat Wall Street estimates in the fourth quarter, helped by a large number of shows. Procter & Gamble jumped by 4.2% after beating expectations for a second quarter profit. Tesla shares grew by 0.2% ahead of the report, which will be published late Wednesday. Meanwhile, the yield on the benchmark 10-year treasuries increased to 4.13778% on Tuesday from a Monday's close at a 4.0940%. A strong U.S. economy and resistance from the Fed policymakers are causing some investors to rethink their bets on how quickly the Federal Reserve will cut rates this year. A shift rippling through markets even as stocks hover near record highs. Traders now expect the Fed to make its first rate cut in May rather than a March with an 88% chance. Fed funds futures on Tuesday showed the likelihood of at least one rate cut at the Fed's March meeting at 41%, down from 88% a month earlier. Among the data showcased the economy's strength are retail sales and consumer inflation, which rose more than expected in December. Investors are awaiting another key inflation indicator, the PCE price index for December, that will be released on January 26. Already on Wednesday, US stock index futures pointed to a further stunning rally in Wall Street. Quarterly earnings were again in focus, with the Netflix shares rising on expectations of an increase of subscribers. Netflix extended gains to 9.6% before the opening bell after the streaming pioneer won its fourth quarter subscriber growth race thanks to a strong content expansion. Market giants such as Microsoft, Amazon.com and Meta also rose by about 1% each in the pre-market, as US Treasury yields fell to 4.0955%. Tesla shares were up 1.5% before the opening bell. The company has informed the suppliers that it wants to begin production of a new mass-market electric vehicle, codenamed Red Bull, in mid-2025. Tesla's corporate report will be available later today. Besides, encouraged by positive reports in the sector, chip makers including Nvidia, AMD and Intel grew by 1.4 and 2.2%. Speaking of the US economy, the S&P Global PMI will be released today. Analysts say markets are gradually becoming more sensitive to this weight data, although the ISM index remains a key barometer. China lifted market sentiment on Wall Street. China's central bank will cut the amount of cash banks must hold as reserves. It will be the first cut as policymakers expand efforts to support a fragile economic recovery. Shares of US-listed Chinese companies such as Alibaba, Bilibili and Liaota added from 1.9 to 3.2%. Today, the US dollar index pulled back from a 6-week high printed a day ago. The index climbed to 103.70, however, it failed to settle at this level, so the instrument was trading lower for most of the New York pre-market. A series of PMIs for the EU escalated the greenback's weakness. The US dollar index slipped to 202.80, having lost 0.7%. The intraday CAD for the index is seen between 102.70 and 103.20. The US dollar fell on Wednesday as the yen jumped, and expectations that the Bank of Japan will soon wind down its ultra-loose monetary policy, and the euro, pound sterling and yuan also rose in sync. Japan's strong export data on Wednesday added to the positive sentiment, and the dollar dropped by 1% against the Japanese yen to 146.76 yen. At the time of recording this video, the euro was up 0.68% to 1.0920 after falling by 0.20% on Tuesday. The pound sterling gained 0.64%. The euro rose after the PMI survey showed that the Eurozone's economic slowdown eased in January, although the economy remained sluggish. Meanwhile, traders are moderating the expectations for the Fed's rate cut ahead of the personal consumption spending report and the Federal Reserve's meeting next week. At the same time, the strength of the American economy indicates that the Federal Reserve has a margin of safety to maintain hawkish policy. And today, the currency market may be affected by PMIs for the US manufacturing and service sectors. In the meantime, the Canadian dollar is anticipating the verdict on interest rates from the Bank of Canada that will be unveiled later today. The USD CAD pair traded at 1.3431 or 0.21% down in the pre-market. The instrument is likely to trade in the intraday CAD between 1.3390 and 1.3520. Today, investors will receive more clarity regarding the further direction of monetary policy, and we do not expect surprises on interest rates. The Bank of Canada will probably put them on hold. Thus, the main driver of the Canadian dollar will be the accompanying statement from the central bank and the governor's press conference. Taking into account the latest data on the Canadian economy, we expect that the regulator will not talk about a dovish turn and will again remind about the likelihood of another rate hike if inflation requires it. The board of the Bank of Canada has repeatedly stated that they do not want to make a mistake in the fight against inflation, and given to our optimism, they admitted keeping interest rates at elevated levels for longer than expected. In the crypto market, popular tokens are recovering from yesterday's fall and are no less determined to reach the previous highs. Bitcoin has plunged by more than 20% since its peak earlier this month, following the US Securities and Exchange Commission's decision to approve spot Bitcoin ETFs. Bitcoin skidded to around 38,700 on Tuesday, down 20% from its 3-year high on January 11. And today, the crypto has regained almost all of its lost weight. Traders bought the fall, and the flagship crypto again approached $40,000. Our analysts project the intraday CAD between $38,700 and $40,200. If the token settles above $40,000, the following bullish targets are seen at $41,200 and $42,300. Otherwise, the crypto should challenge downward targets at $37,600 and $39,900. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Financial markets offer ample trading opportunities. Good luck in your trading and see you online tomorrow.